Hello, everybody. We'd like to welcome you and thank you for attending today's presentation. Today, we will be discussing the semiconductor industry, and we'll be taking a look at two firms performing competitor analysis. This is a group presentation researched and edited by Group 9. Our presenters today are Evan Neusser, Carlos Santos, Henry Ross, and Sam Massey. Our two firms that we'll be taking a look at within the industry are Advanced Micro Devices, ticker symbol AMD, and Intel, ticker symbol INTC. These companies were founded only a year apart, with Intel in 1968 and AMD in 1969. Both companies are very large in their industry and are both known for producing semiconductors, motherboard chipsets, graphics processors, and other electronic applications. Today, we'll be covering both companies' 5-year returns, share repurchase information, their dividend policies, financial highlights and statements, debt and tax rate, and we will conclude with a DuPont analysis and determine which company to buy. Starting off with our 5-year returns, we can see from the two graphs on the right that in December of 2015, AMD was trading very low at only $2.14 a share. In December of 2020, AMD is now trading at $93.78. In 2015, Intel is trading at $37.90, and as of December 2020, is only trading at $50.20. AMD has experienced an increase of 4,282.24%, while Intel has only gone up 32.45%.
For share repurchase information, AMD does not repurchase their shares, and this is a big disadvantage compared to its other competitors, such as Qualcomm and Nvidia. This is a big disadvantage because companies that do repurchase their shares from the market could boost the value of their stock and increase the portfolio for their investors. Intel is a great example of repurchasing shares, and they said that they would buy back $10 billion worth of its common stock near the end of 2020. For AMD's dividend policy, they do not pay out any cash dividends, which is another disadvantage for investors, because the investors could be getting free money by the companies that are paying out a portion of the money that was invested into their company. Other competitors do pay dividends, including Qualcomm and Intel. Intel pays a quarterly dividend of 33 cents per share and an annual payment of up to $1.32 to its shareholders.
This is a comparison of the quarterly financial results in 2020 for AMD versus Intel, which is AMD's biggest competitor in the semiconductor industry. If you take a look at AMD's quarterly financial results for quarter 3 2019 compared to quarter 2 2020, you can see that AMD is up in almost every section, up 56% in revenue, 58% in gross profit, 32% in operating expenses, 141% in operating income, 225% net income, and up 191% in earnings per share, compared to its competitor Intel, which is actually down in most of the sections in its quarterly financial results. You can see that they're down 4% in revenue, 1% in R&D, 22% down in operating income, 29% down in net income, and 25% down in earnings per share. AMD is a company that was actually struggling in 2019. Their stocks were at an all-time low, and the company was actually on the brink of bankruptcy. But as you can see, AMD has bounced back and they're performing better than ever. And the reason is because they've made a lot of investments on high-performance computing architecture, like processors, graphics chips for gaming, artificial intelligence, supercomputing, and other bleeding edge technologies. And they're building fast and powerful chips while undercutting the prices compared to their competitors like Intel. And so this strategy was very important for the company, who at the time was really struggling to find a niche for themselves in the semiconductor industry, which was dominated by a relatively small number of key players, one of which being Intel. Another strategy that has contributed to AMD's recovery in the long term is the reduction in the long-term debt that they hold. AMD has decreased long-term debt by about $380 million per year since 2015. Taking a look at the graph on the right, you can see that in 2015, they held about $2 billion in long-term debt compared to 2019, in which they held only about $486 million. As of the most recent quarter, in September 30th, 2020, AMD reduced it even further, and they're only holding $373 million in long-term debt, compared to their competitor Intel, which reports long-term debt of about $38.35 billion. AMD had a relatively low annual tax rate for the fiscal year ending December 28, 2019, compared to other corporations within the semiconductor industry. AMD's effective tax rate was about 8.33%. And if you take a look at the chart on the right, listed are a lot of the major competitors within the semiconductor industry, and most of them have annual effective tax rates within 20%. With the highest one being 22.67%. AMD paid no taxes in 2018 after overpaying in 2017, and their main competitor, Intel, has a tax rate of about 15.2%. So AMD's is significantly lower. It's been up 4.3% from 10.8% in quarter 2 2020.
Return on equity, commonly referred to as ROE, is a financial efficiency measurement which helps investors understand how well a business is able to generate profit with its own equity. A higher return on equity signifies that a business is able to efficiently generate profits with their firm's equity. AMD has a return on equity of 1.0086, while Intel has only shown return on equity of 0.0581. AMD has therefore shown extremely high return on equity compared to Intel, which has shown below average return on equity compared to the industry as a whole. AMD's high return on equity indicates that their finances are being efficiently managed, while Intel's low ROE shows they have recently been under poor management because their earnings have been reinvested into unproductive assets. AMD's higher return on equity suggests that they are more likely to grow successfully in the long run and generate profits for their investors far into the future. Intel and AMD both occupy the crowded industry of computer hardware and both specialize in microchips, which are used in all electronics and computers today. The industry is filled with companies whose stock would be a worthy place to invest money. However, between AMD and Intel, AMD outshines Intel as either a short-term or long-term investment. Unlike Intel, AMD does not currently repurchase shares or pay dividends, and there has been no indication that they plan to do so in the future. Despite this, AMD has shown impressive growth over the past 5 years, with stock prices rising over 4,000%, while Intel's stock has increased by 32%. On top of this, AMD has recently been gaining market share, while Intel has been losing it. Higher return on equity, higher growth potential, and the tendency to be far less volatile than Intel makes AMD the investment to choose whether looking for short-term or long-term gains.